Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. As we've been saying for some time now, there's going to be a collapse and it's going to be a sell Australia story, and that's exactly what we're seeing. Last year we were saying that US stocks were going to collapse. No one wanted to believe us. Last year we were saying very early on, 4 or 5 months ago, the Australian stock market is going down. It's been doing nothing but go down ever since. And I did have a target of 6,800 for the AUS 200. We saw that today. And when I made the forecast for that target, it seemed like this completely outlandish idea. Very few people have picked up and run with our story, but we have been spot on. We have seen a serious collapse in US equities. We have seen inflation go through the roof. Remember, very early on we were saying that inflation in the US was going to go through the roof, it was going to be sustained, it was going to be high, when everyone else was still thinking it would be transitory. So we've certainly given you the inside run, and I hope you've made the most of it. I know some people have absolutely cleared out their entire personal portfolio from the equity market in recent weeks, and aren't they feeling good today? Certainly you don't have to do that. You can hedge your exposures actively in the market with the instruments that are available these days. So really there's kind of no excuse for not having hedged your equity portfolio if you have one. Of course, as it becomes mainstream financial news media headlines, then more and more people are going to want to do just that. And as people do that, then of course we approach some kind of medium term, if not long term low point. So I hope to be talking about possible recovery phases just when everyone else is pretty sure the market is going to keep falling, the reverse of what we had in recent months. Not only did I say US equities are going to fall, not only did we map out better than anyone else in the world what was driving inflation, which was freedom of pricing as well as supply chain disruption, using supply chain disruption as the excuse, which is why we understood very early that you would have higher earnings and inflation at the same time, that they would both keep going up. But not only did we map all of that out, and below trend, a serious economic slowdown in the US when everyone said there was going to be a nirvana economic recovery, the decline in manufacturing and industrial output we forecast for China and the United States, the contraction in consumer confidence and retail sales we forecast for the United States, and while all of that was going on, we were forecasting Australia to have a very subdued, very small recovery out of the latest lockdowns. And again, we even had the Treasurer and the head of the Reserve Bank saying, oh, won't it be amazing as we come out of these lockdowns, we're just going to have this terrific economic surge. I said, no, we won't. What are they talking about? Can I have what they're having? And it's been the case, a very subdued recovery for the Australian economy. Around that time I was saying this is a sell Australia story because of our alienation of our biggest trading partner, China openly declaring that it will shop elsewhere for whatever it can, buying from Australia of course as it needs to, but also shopping elsewhere. That is long-term economic damage to our economy, regardless of your political point of view. We've also seen a very lackluster performance from the Reserve Bank, which means Fed's going to be raising rates far sooner than the RBA, who's still scratching their heads. I think, I don't know, maybe they're doing a jam musical session somewhere. Who knows what they're doing? But that means that there will be higher rates in the US than Australia, just as Australia's trade outlook is deteriorating, just as global travel, as I always said, is not coming back immediately to what it was previously, and it will be a very long-term process, not a short-term event. That we get immigration coming back, that we get foreign travelers, even the backpacking industry, backpackers from around the world visiting Australia. That's going to take a lot of time because they run the risk of being stuck in a country, stuck away from their families, etc. And also that will permanently downgrade the idea of migrating to Australia as well going forward. So all of these things are going to be dragging on our external and internal state of being in Australia. That's why I said from a very early point in time, it is a sell Australia story. There's a sell US equities story and there is a sell Australia story. And I've highlighted many times how before the 1929 crash, manufacturing had already slowed substantially. That was already obvious. We are seeing that manufacturing slowdown around the world. And we're going to see data jump around a little bit, but certainly that slowdown scenario has unfolded. I've been bearish the euro, I've been very bearish the Australian dollar. We're seeing that sell Australia collapse scenario that I mapped out months ago, becoming increasingly fueled to the downside, if you like. And we called the top in the Australian dollar at 77.45 on national television on AusBiz, and we said 70 cents immediately, and then I said 65, and we've seen all of that happening. So at some point, the markets will turn around, but I don't think we are there yet. I don't think we're only just getting people like, I won't name names, but some in the financial media and the general press media, only just starting to sort of talk about, oh, inflation's everywhere in the world at the moment. I mean, we were talking about this 6 months ago. So it takes a while for all of financial media to shift from bearish to bullish, as we saw in the GFC. Some organizations, major global financial media organizations, only became bullish the US stock market around 2015 after it had been going up for 6 years. So I got hate mail for being bullish 2009 to 2012, and now I'm starting to get hate mail for being bearish. So it's a very encouraging sign indeed. We're here in beautiful Sydney, and Australia will remain a beautiful and wonderful place to live. It's just not going to be the economic nirvana that some of our political and Reserve Bank leaders have wanted us to believe. But of course, they've done everything they could to achieve it, giving Australians the highest per capita stimulus amounts in the world, and giving crisis low interest rates when the crisis passed 6 months ago, really economically. So what am I trying to say? There's still a whole large group of people at the political, institutional, hedge fund level who still do not understand what is going on. But when they eventually catch up, that's when I'll turn bullish. And for the moment, we haven't reached that point yet. So I hope all of these warnings have helped you to be ahead of the crowd, because remember how much power you garner to your investment outlook when you've managed to be out of the market during a sharp fall because you were smarter than the herd. That is the thing we're always trying to do. I do not get it right all the time. We've got it exceptionally right this time. You can't do better than we've done at ACY over the last 6 months. I hope it has helped. If you're not yet short, just be a little bit cautious on the day going short here. We've just had a big fall, but I do think the dominant overall risk, and that is after all the only way to invest and trade successfully long term, is always understanding what is the overall dominant risk. We can have aberrations and moves here and there, and that is still to the downside. So perhaps we'll see 6650 on the AUS 200 now that my 6800 target was achieved so easily so early in the year. Remember at the start I said could be the first week of trading when we had new highs in the US, that marginal new highs. So that could be the highs for the year. Certainly it looks to be the case. Remember, I'm not talking about a 2-week correction. I'm talking about a 3 to 6 month period. We're already in that range for the Australian market. But I'm also considering, what if it's a 3 to 6 year scenario where markets were just too fully priced? Inflation's going to continue to eat away at the US economy as the central bank there is raising interest rates way too late. We could have had a lot of little steps up until now, and we wouldn't need to do what the Fed wouldn't need to do what it's now going to do, which is to come way late to the party and therefore have to bring several crates of champagne along with it to justify being so late to the party, in the hope that it can regain some level of respectability. I noticed Jerome Powell today, he kept saying, you know, it's been difficult to forecast. Even the professional forecasters didn't forecast that inflation would be this high or be strong, and he's just kind of constantly justifying, yes, we the Fed got it totally wrong, but everyone else did too, so it's okay. No, it's not okay. Anyway, enough from me. Clifford Bennett, Chief Economist, ACY Securities. I hope you have a great day. It's great weather, but I know some parts of Australia are getting hit hard by storms at the moment. Stay dry, stay safe, stay off the roads if you can. Have a great day, great week. Have a great year regardless of what markets do. Clifford Bennett, Chief Economist, ACY Securities. Thank you very much.